Hey guys, welcome back to this particular episode of Behind the Stock. Now, Palantir's Q3 earnings report just came out recently and many investors are worried. Why is the stock going down? I mean, the earnings results are pretty strong. Now, if you look at the revenue, Q2 grew 49% year-over-year. Meanwhile, for Q3, it is at 36% year-over-year, beating the expectation of 33% growth. Also, total commercial revenue growth is at 37%. For those who need a refresher, Palantir is a software company dealing with big data analytics. They have two different customer-facing platforms, GoTerm and Foundry. GoTerm is designed for government agencies, especially for those in the defense and intelligence sectors. Meanwhile, Foundry is built for commercial companies, which have been adopted across over 40 different industries. Palantir is more famously known as a company with the tech that helped locate Osama bin Laden in 2011. And their software also used to trace COVID-19 infections, track medical supply chains, and even predict outbreaks in pandemic hot zones. Now, if you want to watch my previous analysis on Palantir, click on the link in the description box. You can watch that particular video. Anyway, back to the earnings update. The CEO of Palantir announced two modular offerings that they have taken to market. One is carbon emission management, and the second is Foundry for crypto, which is their AML for crypto and fintechs. AML stands for anti-money laundering to prevent financial crimes. Let's talk about their carbon and emission management first. According to the COO, this is an area they are seeing growing momentum. Customers across different industries are building carbon-focused common operating pictures to track live emissions, to stimulate emissions impacts of the changes to suppliers, to technologies and regulations, and to make real-time changes to their business. In terms of the market opportunity, the global carbon footprint management market is expected to grow from $7.76 billion in 2020 to $8.63 billion in 2021 at a CAGR of 11.3%. As for Foundry for crypto, Palantir said that they have found a unique fit with fast-growing crypto companies that need industrialized compliance solution. As we know, crypto is largely unregulated, which comes with its risks. It was mentioned in the last quarter that one of Europe's largest retail banks has deployed Palantir's AML solution in 2 days. So far, the cost, the speed, and performance by Palantir's AML solution is unmatchable. According to Napier, which is another AI-powered AML platform, the total global projected cost of financial crime compliance rose by 18% in 12 months, reaching just short of a massive $214 billion in 2020, with some variation per geographic region. Notwithstanding that different market size and numbers of financial institutions, the largest cost increase was in North America at 33% to $42 billion. So I can foresee demand for Palantir's AML solution. As mentioned earlier, Palantir has GoTerm and Foundry to serve two types of clients, government and commercial. Looking into the commercial segment first, seems like pretty positive. Commercial growth 101%. Commercial deal value grow year-over-year this Q3. In terms of US commercial revenue growth, Q2 grew a 90% year-over-year, while Q3 is at 103% growth. Commercial customer count growth quarter-over-quarter was 32% in Q2, but increased to 46% in Q3. Moving on to the government growth in the third quarter, Palantir signed new deals with the Department of Health and Human Services, the Air Force, the NIH, and more. However, the government revenue growth has gone down from 66% in Q2 to 34% in Q3. The concerning part is that there is no further explanation provided by the management. Overall, Palantir increased 34 net new customers in Q3, with average revenue from top 20 customers increased by 35%. Adjusted operating margin-wise also improved from negative 11% to positive 32%. So far, seems like Palantir is performing quite well. But how come the market does not like it and punish them with a 10% drop after Palantir released their earnings? Well, there are three potential reasons. One of them is because of the slowing growth concern from the government contracts, from 66% growth in Q2 to 34% in Q3. And management fail to explain why. And the second possible reason is a topic that most investors care about, which is excessive stock-based compensation, which dilutes shareholder interest. Now, stock-based compensation is when the company rewards employees, executives, or directors in a company by giving them company shares. While stock-based compensation is a great way to incentivize and retain great talent, many investors are concerned that Palantir is diluting the shareholder too much. Looking at 6 months figure till end June 2020, the total number of shares are 618 million, while 2021 hit 1.96 billion. That's a 200% growth in terms of number of shares. Shareholders' interest is badly diluted. However, do note that Palantir was a direct listing on 30th September 2020, where no additional capital was raised. However, if you compare the latest number of shares, which is 1.96 billion with 2020 year-end number of shares at 979 million, you'll realize it has doubled over the course of 9 months. With a revenue guidance of 40% revenue growth for 2021, the dilution for the year is still significant. However, if we compare quarter to quarter, there isn't a huge increase this year, with the latest number of shares at 1.96 billion compared with 1.89 billion at 9 months ended. The number of shares growth is just 2%. And the stock-based compensation for the first 9 months also dropped significantly compared to previous period. So to me, this is a positive sign. Overall for me, dilution is a major concern. However, I must acknowledge that the management must balance the shareholder interest and retaining key employees for long-term success. It's not an easy job. I'm willing to give more time for the management to prove themselves. I'll continue to monitor Palantir's revenue growth and the number of share growth. And the third possible reason I believe why the share price dropped is their low operating margin guidance of 22% for quarter 4. In quarter 3, Palantir achieved a 30% operating margin. This is a good sign, but the low guidance got the investor worried that the margin is not sustainable and will decline in the future. However, if you didn't realize, during quarter 2, the management also gave a quarter 3 guidance of 22% for operating margin and they exceeded the target. So I suspect the management is managing investors' expectation. Well, to me, it's much better to overperform than underperform. So as a conclusion, looking at both positive and negative side, I'm still very bullish and long on Palantir's growth moving forward, considering their total addressable market. Also, so far, no companies can do what Palantir does. Now, what about you? What do you think about Palantir's potential moving forward? Are you excited or worried? Comment down below. Let me know. Now, if you think that this video is useful for you, if you like it, please help me to actually click the like button and subscribe to the channel, and of course, share with your friends and family so that we can learn from one another. Till then, I'm Alex and goodbye.